we reviewed the assessments. We took those to the underwriters. We were able to get a 7-year, on this one, a 7-year policy term to protect both the new owner and the lender. And we actually had it to where that policy could transfer, which is not very common, but we were able to negotiate that. So what happened? The sale went through, right? A live case study of a deal that we helped save through the use of pollution insurance, right? So all your general liability policies are going to exclude pollution. Pollution is a separate coverage that you have to get. And there's different types of pollution coverage. There's no standard coverage. So it depends on your property, what's going on that property. So here, I'll just give you a little example. We had our client was a storage facility, and the property was bifurcated, and we had storage units. Wow. And we also had just parking, like vehicle parking over here. This was a dirt lot. This was an old landfill. Here and here, this was a roadway, all right? So my client, been a client for a while, many years. They purchased this, already completed. They did not develop it. They operated it. They did some value add. They were repositioning to sell, right? Well, at time of sell, the lender, which is a prudent lender, right, they asked for the environmental assessments. So an environmental assessment, you're going to have a phase one, we call them ESAs, environmental site assessments. You can have a phase one, phase two, and a phase three. Now, not all properties will have a 1, 2, and 3. A phase 1 is typically, and we'll get more into this at another time, but just as a cursory review, a phase 1 is just a basic review of the property. Was there anything around it? Was there a landfill, right? Were there any type of old wells on the property? We see this a lot of time in urban areas, right, where there's an urban infill project. If there is, then they'll go to a phase 2, do some more investigations, and on to a phase 3. And the phase 2 and 3 can involve typically invasive testing of the property, where they might do some ground penetration, some ground core drilling, take some samples to really identify what's going on that property. And the biggest thing here, and there was a concern with migration. What do I mean by migration? We could have landfill migration through the property or to the property. We could also have migration, through this parcel to the other parcel. So what would happen in that instance, right? So it would devalue the property, right? Essentially, if we have a pollution event that either A, causes harm to another party, a third party, or to your first party onto your property, right? It could require cleanup. It could require, some third party litigation. So we've either have cleanup costs for you, the owner, or it could be, potentially some other migration to an adjacent property that could cause issues, right? So what we did is we took a look at the deal, right? I got a call from my client. They said, hey, we think the deal is going to fall apart. Do you have any general thoughts? I said, absolutely. Let's go see if we can get a pollution policy to provide coverage for the new lender. We're going to get an endorsement to protect for the new owner, right? So our pollution policy provided coverage to the new owner. And most importantly, because the lender was needed for the project, we had a lender endorsement. Trying to spell today, right? And what we did too is, I worked with the underwriters. Again, we're consultants, we're not brokers, but I knew the proper contacts, and we have a specialty pollution environmental company that we use. I said, hey guys, let's take a look at this. And on an environmental or pollution policy, one of the things we're going to do, it's not an annual policy, right? That's not like a property policy or a liability policy that renews every couple of years. So we actually got multi-year policies. So we had a 5, a 7, and a 10-year policy term. Right? So I got pricing for 5, 7, and 10 years. And what this did is, obviously, the longer period you go, you're going to have some premium savings. And secondly, it's going to give everyone some comfort as far as what's going to happen with this property over the next 5, 7, 10 years, and give them a financial stability both for the owner and the lender. Something else we did, we actually made it to where we could transfer this policy too. So in the event the owner wanted to buy it, it protects not only them as a current owner, but they know that they have 5, 7, or 10 years of protection. And then chances are, at that point, unless there's some type of major event, things are going to be okay. We don't know, right? I would always recommend the longest term. In this example, I think they chose the 7-year. But again, what we did was the problem that we identified, that the owner identified, was they were selling the property. It had a pollution event. Why? Because the landfill next door, there was possible migration. We ended up this one had a phase 1 and phase 2 environmental assessment, and we reviewed the assessments. We took those to the underwriters. We were able to get a 7-year on this one, a 7-year policy term to protect both the new owner and the lender. And we actually had it to where that policy could transfer, which is not very common, but we were able to negotiate that. So what happened? The sale went through, right? And that's what we do. Our goal is to bring value and look at potential products that are in the marketplace to transfer the risk so that my client who owned this could sell it, and that they could sell it to the new owner and then the new lender, and everyone had a protection mechanism in place, right? So we talk about insurance, right? Insurance is a form of risk transfer. The risk identified was a pollution exposure. We were able to transfer that risk for a nominal amount of money. The deal still went through, and my owner was happy because they were able to sell the deal. The buyer was happy because they had a new project. This was actually a large national firm that bought it. They added it to their portfolio, and the lender was still able to lend on a new collateral piece where they had protection. So this was just a short example of pollution coverage and how many insurance projects can be used. Insurance products can be used to help deals get done, and that's our goal, right? We always want to protect, whether you're the owner, the lender. We want to protect your investment or collateral, but we also know the deals have to get done. So that's what we're here to do. Any questions? If you have something crazy you want us to take a look at, I'd be happy to help you. My name is Douglas Francisco, Spartan Risk Management.